Good morning, everybody, and happy Thursday. Happy Thursday. We've got a couple of important things to go through. We're going to take tickers today as well. It's Ticker Thursday. I just came up with that, by the way, but I think we can call it Ticker Thursday. That actually makes sense to start doing Ticker Thursdays, where you guys can start typing in more of your tickers. We obviously take tickers throughout the week, but I think I'd like to start doing a thing where we take at least, let's say, 3 tickers and go maybe a touch more detail in them as well. So we'll get started here in about a minute or so. I'm going to quickly just check one more thing over here. It sounds like you guys can hear me, so that's great. I'll be right back. I'm going to quickly move on over to my other computers here for a sec. All right. Ha! You want to look at Palantir? I'll show you Palantir. You guys, who in here has the trender, by the way? Well, and we'll get started in a second. But just all right. You guys need the trender. I'm telling you, and I'll tell you why right now. We'll show you this in a minute. Show you this in a minute. All right, cool. Thanks, guys. We'll get started in just a second. I want to just quickly check something so I can share this with you. There we go. All right, cool. All right, good morning, everybody. Happy Thursday. It's Serge Berger here from The Steady Trader. This is our morning show. It's called Set the Market. If you're here for the first time, we're going to spend about 10, probably today closer to 15, maybe even more than 15 minutes this morning, going through some of the top things that are on our mind. So let's get started. Just to give you a bit of a preview, we're going to look at an ETF called EPOL. It's one of the best performing countries this year, and we'll show you why we think we're getting bullish on that through probably at least an intermediate lens of multiple quarters. We're going to go through Apple. We are going to look at Palantir, Meta, Carvana, Twilio, and then we're going to take tickers. But we're first going to start off with the dollar, okay? We talk about this a lot, and I know this is a bit of a foreign concept to the retail investor, but that's what we're trying to do. We're trying to give you as much insight as we can through the lens of education why this is important, okay? So what you're looking at here at the top left, I guess the top left-hand corner of this chart that I created is a correlation metrics. What a correlation metrics does, very important, it's the kind of stuff that, you go to any hedge fund, any one professional investor, hopefully you're an investment advisor, and God willing, I hope you have one, you look at correlation charts. Why? Because we need to know what's the correlation between one asset versus another. What I've got here is the correlation metrics of the S&P 500, the NASDAQ 100, and gold versus the US dollar. Very important, because if we can get more or less the correction, the direction right about what the dollar does, we have a much higher probability of getting other things right. Okay, so and these correlation metrics can be created on versus stocks versus stocks, ETFs versus ETFs, whatever, right? But this is a really important one because it dictates what the broader market does, meaning basically your portfolio, which is mostly S&P 500 stocks. If you look at it from a correlation perspective, that's how most people are currently positioned, and that's why there's so much risk in the market from that perspective. It's not necessarily a valuation risk, although it's lofty valuations too, but that's the bigger risk that everyone has. So what you can see here, if you look at this a bit closely, you might have to squint just a touch because I can't make it a whole lot larger. But the UUP ETF, UUP is the dollar ETF, the US listed ETF that basically tracks the US dollar. And you can see that the correlation versus all the other three assets, albeit not like perfectly negative, are negative. What does that mean? So if the US dollar continues to hold up here, it continues to kind of soften. If the US dollar continues to soften, which it has, I'll show you the chart in a minute, then it is quite likely that the S&P 500, gold, and even the NASDAQ are going to hold up, right? All else being equal. So one of the first things that I do, in fact, it's the first thing I do every single morning, I talk about this all the time to our clients, is I want to know, what does the dollar do? What is the dollar doing? And all else being equal, the dollar has been weakening essentially since topping out on the 13th of January. So what I'm looking at here is this move here, right? This is what we've seen. Now, I don't know how much further the dollar goes or if it starts to bounce, but I'm trying to tell you that there's an inverse correlation. It's not perfectly inverse, but as you can see by the correlation metrics, it is inverse. So I think to a good extent, the S&P 500, the NASDAQ, and certainly gold have been holding up better than I would have expected, over the past couple of months, because we've seen the dollar come off, or at least the past month, because the dollar has become a bit weaker. Okay, so we're watching this very closely. I will keep you updated here. If you guys need me to update you on this, please let me know if we get a chance here in the Set the Market Morning Show. Otherwise, over in the Trade Ops chat room and members areas that you guys have access to if you are a member of the Steady Trader. All right, so that's number one. So keep this in mind, and hopefully this is giving you some perspective. I realize a lot of people are too lazy and usually don't care about this kind of stuff until their portfolio blows up, but I'm trying to give you the best, the most value possible, and show you the stuff that we look at here from an institutional perspective as well. That's number one. Number two, let's go a little bit more charts, and now you guys can wake up and you can look at it, because I know the dollar stuff no one really gives a shit about, even though it's the most important thing. So let's look at Poland, okay? When is the last time you looked at the stock market of Poland? Okay, don't even answer. You've never done it before, right? There's a 0% chance you have, unless you're Polish, or your money is being invested by a private bank which has more of a global approach. All right, so you've never looked at the Polish stock market. Now, all of you guys that like to look at charts, let me get a bit of feedback here, and I think JB, you're in here as well. Does anyone, when you look at this chart, let's say this is your favorite chart. Let's say this is NVIDIA. Is this bullish or is this bearish? Give me your unbiased, politically unbiased, Twitter-inspired, crap unbiased. What is this? Is this bullish or bearish given just looking at a chart? I'm going to pause for a second and see what you guys think about that. And then I'll show you an ETF as well, because there's a US-listed ETF that you can look at. All right. Okay. So all else being equal, this would be bullish, right? All else being equal, just from a charting perspective, this would be bullish. Now, okay. All right. Maybe we have to go through a technical analysis 101 course, but it's bullish is basically what this would mean from a technical analysis 101 perspective. However, there's another thing here, and I always say that technical analysis is nice, but it's actually even more important to be able to put it into context. I do think that's important. We need to understand that Poland is actually a great beneficiary of potentially rebuilding Ukraine. Okay? Of course, we have to get to that point first, but they're very much as a beneficiary to that. There's a lot of reasons for that. And I'm going to show you an ETF right now, because I know none of you guys are going to go and open up a Polish account so you can trade this. Here's an ETF. Maybe potentially near term a bit too far, too fast, but that's not the point, right? The point here is this is an investment allocation, okay, that I'm looking at. Obviously here, educational. This is not advice, as always. But yes, maybe near term too far, too fast. I mean, this EPOL basically is up about 25% year to date. The S&P is up 4%. It's beating the living daylights out of the S&P, right? So it's like those hockey fights of the US-Canada match the other day. So Here is the EPOL ETF. Again, this is not a trade for today or tomorrow. This is more like a multi-quarter, maybe multi-year sort of view. And here is the chart if you were to look at it from at the ETF. Before we looked at the actual underlying index, right? Now we're looking at it through a dollar-denominated ETF. But here too, this is probably not bearish. Obviously, again, as I keep saying, no, it's not investment advice, but it is certainly something that I think is interesting. So it's up 25%. The question, of course, is, now people get to this point, oh, it's Poland, right? And now the biases start kicking in. Oh, it's not NVIDIA, right? Now, obviously, this is a country index, not going to rally 900% like NVIDIA. That's a stock. But the biases start to kick in. And this is where a lot of people are going to underperform the market and ultimately maybe even blow up their accounts. So I encourage everyone in the year of the trader, I think this is a transition year that we're experiencing here this year, meaning it's a year where we are going to move from a trend following S&P centric environment to a more of a open-minded, there's going to be opportunities outside of Max 7 and AI kind of environment. That's not to say that AI doesn't matter. There'll be opportunities, but there's going to be stuff that might be much better. Like the DAX, for example, this year alone is beating the living crap out of many other things. So this is so write this ETF down. It's EPOL. If it's too small for you guys to see, I'll quickly type it in. EPOL. I'm giving you just the technicals here, the fundamentals, the sort of structural part of it. I think is obviously is what drives this. There's always a bigger story that drives the technicals, obviously. So just something to look at. Obviously, I know none of you guys are allocated to this, and again, this is not advice. But maybe get with the investment advisor who maybe if he can find the country of Poland on the map, and you can educate him or her about this, then this might be something worth looking at. Through, again, this is not a trade, it's more a multi-month analysis. Okay? So that's number one. Again, hopefully this wasn't too boring, but I think it's something that that has a lot of merit here, and it kind of shows where things are heading in my view. All right, that's number one. Actually, that's number two. We talked about the correlation. Hopefully this was helpful. Was that correlation stuff, does anyone care? Does that resonate with you guys? So that's number one. Number two is EPOL. Have a look at it. Again, not advice, purely educational, but I think it's very interesting given the backdrop of what we're having here. Okay, let's move on. I want to quickly give you an update on Apple. So Apple, of course, has reported its earnings. Then what we're seeing with Apple is that it's in a bullish trend. But we also have Apple on a bullish momentum trade. And this is where we go into our momentum indicator. So if you're using our TST trender, and gosh, I hope you do, look at Apple. Here are the past few signals that we have received on Apple. So again, first of all, Apple is on our proprietary trend following work. Apple is in a bullish trend. That's this green background color. Doesn't mean it has to skyhook to fresh all-time highs by, in like 15 minutes from now, but it does mean that it's in a bullish trend. Next thing we need to know is what is Apple doing? Okay, on a momentum chart. So we had a nice bullish buy signal back in November. We had a sell signal, a momentum sell signal in January. Both of these worked beautifully, and we now a couple of days ago got a new momentum buy signal. We have a profit target at 253. So let me maybe note this down: 253 and 236 would be the stop loss. This is a trade. T.S. Leong is saying there's no options on EPOL. I said it about 5 times before, Thomas. T.S. Leong, EPOL is not a trade. That's an investment allocation. That's an investment time horizon, in my view. So I don't know why I would consider options for that. That just doesn't make any sense. So just as an FYI, that's not the point. It's really not the point. It's a multi-quarter investment allocation. And by the way, when something goes up 25%, and I know that's a big move, I'm not sure why you need options, right? For an investment. For a trade, that's a different story. That there's more of a short-termism to that. Okay, so Apple, we have a upside profit target of 253. This is a pure momentum trade and a stop loss at 236. So that's Apple. So I'm going through my notebook that I shared with you guys yesterday. I want to quickly check things off. So that's correlation trade, that's Poland, that's Apple. And now we're going to go through Palantir, Meta, Carvana, and Twilio. And it also would be a good time if you guys have tickers you guys want to look at, please type them in and we will look at your tickers. I'm going to start off with Palantir. All of you guys that have the trender indicator, here's what happened yesterday. Okay, this is an intraday chart on a 5-minute basis. This is a 5-minute basis. This is why you want to use the trender. The trenders are a momentum indicator. You can put it on TradingView. You can put it on Thinkorswim and a couple other places. And again, Apple currently, we have a new bullish momentum trade. And intraday yesterday, it nailed the entire move. So if you are long Palantir, 10 ways to the moon, and you're probably levered long it, and I'm not saying you guys, but like if one were, one basically yesterday would have gotten castrated. So intraday. So what we had here is we had a buy signal at 2:35 p.m. Eastern time. And you can see that if I would have taken that signal, then I would have ultimately lost about 0.72% because that's what 0.72% on Palantir. That's like a penny. Like relatively speaking, given the stock's volatility. And then we got a sell/short signal. And then from that point on, the stock dropped until the end of the day, actually dropped as much as 11.6%, which is at pre-market, it's actually down at 108. So up to pre-market where it is right now, the stock is now down 11.6%. Okay? So if you have the trender, there, I'm not making this up. I'm not drawing these little arrows on the chart. Like this factually happened, right? And if you use the trender and you know the rules, it actually ended up breaking below support as well. And the little sort of side details that we have in order to get into a trade. How about in the big picture? Where's Palantir now? Look, Palantir has turned into essentially it's like a cartoon character at this point. You can't really take it that serious. It's not a bad company, right? But it's extremely vulnerable right now, and it's vulnerable not like to a 10% drawdown. We had that in like 2 hours yesterday. This thing can easily drop 40%, and that would be healthy. Right? So just keep that in mind. It doesn't have to do that, by the way, but it can. So the stakes are quite high here in a stock like this. And, if you think about I keep forgetting the CEO's name with the wild hair. Why is he filing to sell some shares? Well, I think he's probably aware of how lofty this has gotten. Again, not a bad company. That's not my point. I'm simply looking at this from an opportunistic perspective. So that's number one. The second stock that I want to show you is Meta. Meta had a hell of a move, and it too has had a nice down gap yesterday. The stock yesterday on the day was down. What was that one? Is that it? Is that all it did? Is 1.76%? Oh, because it was down more the previous day. So over the past couple of days, the stock is down. Is down about 4 or 5%. Again, they're just mean reverting these things. But again, just keep in mind that given the one-sided moves we've had, these stocks can fall a lot more. I think, if you're not thinking a stock like that, or particularly Palantir, can drop 40%, I'm sure you'll never complain if the stock rises 40%. A lot of you guys, folks, you have not seen a cycle. Okay? When you see cycles in markets, you realize that things are different in normal environments. This has not been a normal environment. I know it's different this time. And notice my sarcasm. It's different because we have AI, and it's going to cure everything from whatever to whatever, right? But it's not different this time. I can guarantee you, as far as the markets are concerned, AI might do things and solve things faster. And listen, I use it all day, but the markets are not going to act differently because of that. The markets are a lot about positioning, and that's one thing that when you listen to all these guys on TV, particularly the technologists, they're missing that one very major point. They're probably correct, or they might be correct about their technological forecasts, but they're missing the positioning. That is extreme, it's crowded, it's unbelievably one-sided, and that's typically a breaking point for a lot of things. Even if the news isn't all that bad, things can break at the margin. Remember, the markets look at the margin. So that's what's really important there. So Meta, not catastrophic, obviously, but it's mean reverting, so that's one thing. And then I want to quickly show you Carvana. This is another funny one. Carvana is down a little bit this morning. It's actually set to open around 268. So it's actually not dropping that much, but it too has had a vertical move. So I'm trying to show you these vertical moves that, I just don't want people to get trapped in these vertical moves. Just because your neighbor and your favorite character on TV is screaming at the top of their lung that this is a great company doesn't mean that the stock can't correct sharply, particularly when it goes vertical like that. Like Carvana, just so you know, Carvana in December corrected 30%. Why can't Palantir correct 30, 40%? Is that not possible because it's such a great company? No, you're wrong about that. Trust me. It can. I'm not saying it will, but it can. Okay? It absolutely can. NVIDIA had 2 near 30% corrections last year. No one gave a crap because it had a V-shaped reversal every single time immediately. So that's kind of the reason why no one cares. But when that stops happening, that's when the real problems start to occur. So we want to be mindful and open-minded to this, right? Open-minded. By all means, if we get a great opportunity to buy these things again, hey, I'm all for it, right? I'll be the first one to be happy to buy those things. And the last one, Twilio on my end. If you guys have tickers, please type them in right now. I'd like to take a couple if you have any. But Twilio is another good one, right? So Twilio, and this is, by the way, I think fundamentally a good company, and we even use their products. So since September, the stock had a 165% rally, 165%. But since topping out in late January, the stock is down 20. Can it go down 30 or 40? Of course it can. Absolutely. So why can't Palantir do that? Just because everyone says it can't? No, you're wrong about that. Trust me. All right, so that's Twilio. And by the way, just for fun facts, if you like to look at charts and you like to look at, let me quickly bring up my drawing tool here. If you like to look at sort of technical patterns, this is what's called an island reversal in Twilio. So the odds of Twilio immediately, skyhooking right back up to fresh all-time highs, which everyone that bought calls up here is hoping for, otherwise they're going to lose all the entire premium, and there's plenty of people stuck up there. This island reversal is one of the most bearish patterns you can see. Not forever. The stock isn't going to zero, but it may not go higher for a considerable period of time, or at least it'll find resistance, right? If it starts going back up into this area, hey, by all means, it's a buy again. But this is one of the more bearish patterns we can see from a pattern perspective, if you like to look at patterns. Matt wants to look at Ford. Let's have a look at Ford. Well, there's not a whole lot to say. Ford, if Ford remains in a bearish trend, this is why we have the market rover, right, which tells us what the trends are. So if you look at Ford on the trend following charts, it's just bearish. Like, there's just really not a whole lot to say. It's in a bearish trend. It's definitely not bullish. I don't see anything to do on the long side. In fact, you can see we got a new sell signal in Ford on about, what is that, a week and a half or 2 weeks ago, something like that. And I just don't see much to do there. Then FANG is, of course, a popular one. I can see where you guys are thinking. Are you thinking of FANG, the Diamondback Energy, or are you looking at something else? The ticker that represents in the U.S. is Diamondback Energy, and it's really just again, there's really not a whole lot going on here. Let me see. I don't even know if we have a trend on this one here. Yeah, it's just, you can see the sell signal that's been working like a charm. So it's in a bearish trend. That's the rec background color. You can see the sell signals, targets 1 and 2 in the trailing stop. That's also why we want to use the market rover as much as possible. And energy. Okay, so then that's that one. That's FANG. And then CL is CL like Colgate or futures, what's it called? Oil futures. Well, the stock itself is as you can see, remains bearish trend, so there's not a whole lot to do here. I actually think it would be interesting to see some rotation into some of these kind of stocks. Again, there's not a whole lot going on. You can see it's currently bearish trend. I don't see a lot to do. Oh, you meant oil. Okay. Good to know. Oil. I don't know. Nothing. I look. There's really nothing going on in the oil market. There is so much right now that's depends on some of the macroeconomic factors. I know no one really cares about that, but there's so much stuff that could happen, but it may not happen. But it's really like a 50-50. I think I mentioned yesterday, there's so many funds I talk to every day, and we're just like, I don't know. We're in wait and see mode. And quite frankly, that is what U.S. stocks are essentially telling us. Yes, the S&P eked out at a fresh all-time high yesterday. It might as well. It's options expiration week. It goes up because the sun rises in the morning, and that's great. But it's not like it's exploding higher, right? That's kind of my point. So I think we need to just be mindful of the fact that this is kind of it's what it is doing. It's when there's a lack of news, and we've had news, but nothing's really been like sticky, like tariffs on Canada and Mexico get announced, and then you go make a sandwich, you come back, and the tariffs are no longer in effect, at least not until the spring, right? Who cares if that happens? So that's that. All right, folks, listen, we're almost doing 25 minutes. We're way past our due time, but I hope this is helpful. Please subscribe to the channel. Very important. Tell everyone you can about the morning show. Hopefully it's been helpful. We've gone through a lot of stuff here this morning. Hopefully this is a lot of value. Please give us a thumbs up, subscribe to the channel, and we'll see you back here on Monday morning, because tomorrow is Friday. We don't do the show on Fridays. And for all of you guys that are members, we'll see you in the traders op members area. We've got some trades and a whole bunch of good stuff that we're going to look at here today. Take care, and we'll see you soon. And use the damn trender, folks. If you don't have the trender, go get it. I'm telling you, it's a freaking beauty. Just look at the Palantir signal yesterday. That's right there.